There is no way we are clean. These aren't exactly the words that you want to hear coming from the former chief compliance officer of the largest cryptocurrency exchange in the world. But here we are. The crypto world's been in turmoil ever since the SEC filed a lawsuit last week against the massive cryptocurrency exchange Binance. The SEC filed a total of 13 charges against Binance, its CEO Changpeng Zhao, and Binance US for securities law violations. In this video, we'll dive into the details of the lawsuit and talk about exactly what the SEC is accusing Binance of doing. And unfortunately, a lot of the claims sound eerily familiar to the kind of behavior we saw at FTX, and we all know how that one went. The biggest allegation in the lawsuit, in my opinion, is that the SEC is saying that Binance commingled customers' assets as they pleased and sent them to other organizations that were controlled by Binance's CEO. The SEC press release announcing the charges said that Binance misled investors about its internal controls and practices with customer funds, when in reality, the company was commingling billions of dollars in customer assets with two other companies called Sigma Chain and Merit Peak Limited. These two companies were both also controlled by Binance's CEO Changpeng Zhao, better known as CZ. The commingling of customer funds is said to be happening on an even bigger scale than what took place at FTX, with $12 billion in client assets being moved to other entities controlled by CZ. While there haven't been any claims about Binance losing customer assets like FTX did, the fact is that the SEC is accusing the company of misleading investors about how their funds are actually being used on the platform. And this is not the first time Binance has been accused of mishandling customer deposits, as a Reuters report on May 23rd also claimed that Binance had been mixing customer assets with the company's own revenues in 2020 and 2021. The Reuters report was based on people who had direct knowledge of the matter, and Reuters was able to review a bank record where Binance mixed $20 million from a corporate account with $15 million from an account that received customer money. These are huge allegations against Binance that point to potentially very shady use of customer deposits. Another major component of the SEC's lawsuit is that they are accusing Binance of engaging in what's called wash trading. For those who are unfamiliar with what wash trading is, it's a kind of market manipulation where someone buys and sells the same asset to themselves in order to create higher trading volume than what actually exists in reality. Wash trading is illegal because it creates the illusion that there is large interest in an asset, when in reality it's just one player creating fake transactions where they are both the buyer and the seller, and no money is actually trading hands. One study from the National Bureau of Economic Research found that wash trades account for up to 70% of all transactions on non-compliant crypto exchanges, suggesting that most trades on these platforms are fraudulent. The study also found that on Binance, wash trading was estimated to make up 46.4% of the transactions on the exchange, which is definitely not a good look. The SEC accused CZ of using accounts associated with his entity Sigma Chain to wash trade on Binance US's platform. To make matters even worse for Binance, the fact that wash trading was happening was also known by other employees in the company, as a company sales director informed employees that there were 20 other accounts associated with Sigma Chain that were trading on Binance US. Another SEC charge in the lawsuit is relating to the relationship between Binance and Binance US. For those who are unaware, Binance's global platform is not accessible in the United States because the Binance Global Exchange doesn't meet many of the US regulatory requirements. So in order to address these issues, Binance supposedly partnered to create a separate entity in 2019 called Binance US that would be compliant with US regulatory requirements. It was claimed by Binance that Binance US was a separate entity controlled and operated by BAM Trading Services, and that Binance Global did not operate this exchange. But the SEC lawsuit is claiming that this setup was actually a total facade, and that CZ and Binance actually created BAM Trading Services themselves in September of 2019 as part of an elaborate scheme to avoid US federal security laws by claiming that BAM Trading operated the Binance US platform independently and that US customers were not able to use the Binance.com platform. The SEC is saying that this was just simply not true, and that CZ and Binance actually maintained substantial involvement and control of the Binance US entity. They also claim that behind the scenes, CZ directed Binance to allow and conceal many high-value US customers to continue accessing the global Binance.com platform. This organizational chart for Binance that the SEC has put together shows that Changpeng Zhao ultimately maintained control over both Binance and Binance US. Another big accusation in the lawsuit is that Binance and its subsidiaries operated as an unregistered exchange, broker-dealer, and clearing agency. Now, these are technical terms, but this is an important point because all of these activities fall under SEC supervision, and Binance was engaging in these activities in the US without registering with the SEC. For context, an exchange is an institution that functions as a marketplace for buyers and sellers so that they can trade financial instruments. A broker-dealer works a little differently because it's a firm that actually engages in securities trading themselves, which could be for their own purposes or for a client. And finally, a clearing agency or clearinghouse's role is to facilitate the settlement of trades to make sure that funds and securities are settled in their new owners' accounts after a trade takes place. The big issue here is that Binance performed all of these functions in their business without registering with the SEC at all. In addition, the lawsuit charged Binance with offering several unlicensed securities on its platform, including Binance's own BNB and BUSD coins. Securities are by law required to be registered with the SEC before they can be sold to investors. But this claim is significant because it specifically alleges that many of Binance's coins fall under this securities classification. And this is the main point of legal contention for cryptocurrency exchanges and many crypto investors. Crypto companies have consistently claimed that cryptocurrencies do not meet the criteria of a security, so SEC regulations should not apply to them, and they claim that the SEC is overstepping its authority. In many ways, this will be the crux of the current lawsuits against cryptocurrency exchanges, as whether or not cryptocurrencies should be considered securities will determine how much regulatory control the SEC can actually have over Binance and other cryptocurrency exchanges. The legal precedent for whether something can be considered a security is called the Howie test, and dates back to a Supreme Court case in 1946. The Howie test says that something is a security if there is a, quote, investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others, end quote. The SEC claims that cryptocurrencies meet the first half of the Howie test easily, since they are investments of money in a common enterprise. So most of the debate centers around the second half of the Howie test, which says that there has to be a reasonable expectation of profits to be derived from the efforts of others. The SEC has argued that in crypto projects where purchasers are relying on the project's backers to run the digital network, or for them to support the prices through token burning, or for them to continue to act in a managerial role in the project, that these cases meet the second part of the Howie test of having that reasonable expectation of profits to be derived from the efforts of others. With the coordinated regulatory crackdown on cryptocurrency that's taking place in the United States, it seems likely to me that this lawsuit will ultimately land in favor of the SEC and crypto falling under the class of securities. And if we're going to take the opinion of Binance's own former chief compliance officer at face value, who wrote, quote, "We're operating as a unlicensed securities exchange in the USA, bro," end quote, then I don't think Binance itself truly believes its own arguments about crypto not falling under the class of securities. And the reality is that even if Binance were to somehow escape this new SEC lawsuit unscathed, Binance's problems with government regulators go much deeper than that. The US Department of Justice has been leading a criminal investigation into Binance since 2018 for possible money laundering and criminal sanctions violations. And Binance's history is sketchy, to say the least. Binance's CEO, CZ, founded the company in China originally in 2017. In the early days, the bulk of Binance's business was coming from China and Japan, but Binance didn't even have a license to operate in Japan at the time. CZ also forced employees to be secretive and didn't even allow them to mention who they worked for or where the company's offices were. When a cybersecurity company in 2018 asked for the company's address, CZ told the employees to give them an address in the Cayman Islands where a holding company had been set up, even though the company's operations and staff were all in Asia. This kind of secrecy should raise some concerns. After all, people keep secrets when they have something that they want to hide. It's been well documented that CZ has been deliberately working to slow down the Department of Justice investigation and evade regulators for years. These efforts include continued strict secrecy rules for employees, with instructions to use email as little as possible and to communicate using encrypted messaging services. CZ's personal preference for employees is an app called Keybase that features automatic self-erasing messages. To some people, deleting those messages might sound awfully similar to destruction of evidence. The secrecy doesn't even stop there, though. CZ is hiding information about the company to the point that even Binance's former chief financial officer did not have full access to the company's financial accounts, which is totally crazy when you think about it. How are you supposed to be the CFO for a company if the company won't even give you full access to the company books? And even more importantly, what is CZ so desperate to hide that's leading them to withhold this information from even other company executives? Binance is a private company by choice, so they also do not report any figures such as revenue, profit, cash reserves, or how much of its own crypto tokens they own on their own balance sheet. And this transparency into Binance's books and operations is desperately needed. An analysis from Jonathan Reiter, co-founder of blockchain analytics firm Chain Argos, showed that the stablecoin Binance created was not fully backed during large parts of 2020 and 2021. And for context, a collateralized stablecoin is supposed to keep its peg to a US dollar by being capable of being redeemed for assets held in reserve at any point. After this blockchain analysis was published, a Binance spokesperson even admitted to Bloomberg that, quote, "The process of maintaining the peg involves many teams and has not always been flawless, which may have resulted in operational delays in the past," end quote. The spokesperson then proceeded to claim that the process had been much improved with enhanced transparency checks to ensure it's always one-to-one pegged. And then Binance claimed in their blog post addressing the issue that the stablecoin collateral, quote, "has not always been stored in a single dedicated wallet in real time, so that the one-to-one backing was not always immediately visible to users," end quote. But the problem with that kind of thinking is that there's really no way to be sure that the stablecoin was backed one-to-one, like Binance is claiming, because the company is not transparent at all. You just have to take their word for it. And based on everything else, I wouldn't say that their word is worth very much. This secrecy and lack of transparency is a major problem, and it all seems to be part of a deliberate effort to evade regulators and avoid scrutiny from the SEC and Department of Justice. But with this new SEC lawsuit, it seems like those days may be over. But be sure to let me know your thoughts on Binance and the SEC lawsuit in the comments below. And make sure to subscribe to the channel for more finance content. Thanks.